Remember, you are here for a reason. Stay tuned. Keep your eyes opened as the truth gets unveiled. Prince Todd, your mate, friend and family, investigates the truth on our monetary system. All bad news, I'm afraid. Here it goes. Focus, listen up and learn. Money, it is well enough that people of the nation do not understand our banking and monetary system, for if they did, I believe there would be a revolution before tomorrow morning. Henry Ford, helping Australians gain a greater understanding around the circumstances of money and debt in the Australian economy in order to prepare and endure against the next financial crisis. Today, it is more important than ever to understand banking and the monetary system. In order to gain this understanding, one first needs to recognize that money has different values depending upon which instruments you account for as money. Money at a base level is quantifiable as the amount of currency. Money currency includes all notes and coins printed by the Royal Australian Mint under the directive and guidance of the Reserve Bank of Australia. Currency is defined in the RBA as comprising holdings of notes and coins by the private non-bank sector. This measure of money is the most liquid form of monetary assets. Money, currency $122,111,250,529 Australian dollar. Currency is defined in the RBA as comprising holdings of notes and coins by the private non-bank sector. From January 2008, currency volume increased by over 70% from $39.40 billion to $72.30 billion. The volume of available currency is increasing at an increasing rate to provide the liquidity needed to support total Australian credit and debt, which is also increasing at an increasing rate. Currency is the most liquid measure classification of money. Under a credit-based monetary system like that of Australia and most other free market capitalist economies in the modern world, money has a different value depending on the scope at which it is measured. At the narrow end of the spectrum, money is simply currency, but at the wider end of the spectrum, money includes all the outstanding IOUs layered on top of liquid currency. Most of these IOUs exist in banks that are licensed to leverage your deposits by way of loans to other account holders. The banking process of creating loans in turn creates deposits through double-entry bookkeeping in the bank system, and money, albeit leveraged broader money, on the wider end of the spectrum is created. The next measurement of money is M1. Money M1 can most simply be classified as currency plus short-term liabilities. For banks, your deposits in banks show up as liabilities on their balance sheet. It loans that are assets for banks. The RBA defines M1 money as M1 is defined as currency plus current deposits with banks. Money M, $360,809,857,060 Australian dollars. M1 classification of money is defined by the RBA as M1 is defined as currency plus current deposits with banks. Total Australian credit $10,142,742,145,582 Australian dollars. Total Australian credit outstanding includes all debt and equity, outstanding of the domestic non-financial sectors. Total Australian credit has grown from AU $787.7 billion in December 1989 to AU $6.3 trillion in December 2016, an increase of a little over 800% over a 27-year period. Helping Australians gain a greater understanding around the circumstances of money and debt in the Australian economy in order to prepare and endure against the next financial crisis. Total Australian credit outstanding is the aggregate of debt and equity outstanding of the domestic non-financial sectors. Total government debt, $2,115,325,989,048 Australian dollars. Total government debt is the gross sum of liabilities across federal, state and local government in Australia. Total Australian government debt increased by a mere 13.5% from December 1989 to December 2007, from AU $81.2 billion to AU $92.1 billion. However, from December 2008 to December 2017, total Australian government debt increased by over 520% from AU $115.4 billion to AU $716.3 billion. The primary reason behind this increase has been to provide depth in the market for government bonds, so that the Reserve Bank of Australia can easily increase liquidity through open market operations by printing more Australian dollars and buying the government bonds back. Total household debt: $3,947,876,690,417 Australian dollars. Total household debt includes all outstanding debt that Australian households owe. These debts are held with banks, other depository corporations, pension funds, insurance corporations, money market investment funds, securitizers, other financial corporations, and international entities. Household debt has increased over 1,100% from December 1989 to December 2017, from $173.5 billion to $2 trillion December 2017. Total private credit $6,245,943,724,474 Australian dollars. Total private credit includes debt and equity issued to raise capital for private Australian enterprise. This credit consists of one name paper, bills of exchange, loans and placements and shares and other equity. Around 65% of this credit is weighted in share and other equity and is based on the indicative market valuation. Total private credit increased over 620% from December 1989 to December 2017, from $532.9 billion to $386.0 billion. Total government debt, total of national government debt and state and local government debt. Total government debt $2,115,326,219,418 Australian dollars. Total government debt is the gross sum of liabilities across federal, state and local government in Australia. Total Australian government debt increased by a mere 13.5% from December 1989 to December 2007, from $81.2 billion to $92.1 billion. However, from December 2008 to December 2017, total Australian government debt increased by over 520%, from $115.4 billion to $716.3 billion. The primary reason behind this increase has been to provide depth in the market for government bonds so that the Reserve Bank of Australia can easily increase liquidity through open market operations by printing more Australian dollars and buying the government bonds back. National government debt $1,291,340,126,697 Australian dollars. Total national government debt includes all Commonwealth Government securities (CGS) on issue, plus any other liability obligations the Commonwealth Government has. Commonwealth Government debt did decrease in the September quarter of 2017, but started increasing again in the December quarter of 2017. State and local government debt $204,482,467,652. Australian dollars. Total Australian state and local government debt. State and local government debt was decreasing from the begin to mid-2017, but started increasing again in quarter 3 and quarter 4 2017. The money behind this debt, the money behind and backing this debt that ultimately supports the repayments and continuity of the system, is effectively unanchored and merely backed by confidence. The Reserve Bank of Australia, RBA, used monetary policy to manipulate the money supply to support debt levels through the production of fiat currency, a framework known as monetarism, pioneered by Milton Friedman. Click here for more information on the Australian money supply. The RBA outlines monetary policy on their website as the Reserve Bank is responsible for Australia's monetary policy. Monetary policy involves setting the interest rate on overnight loans in the money market, the cash rate. The cash rate influences other interest rates in the economy, affecting the behavior of borrowers and lenders, economic activity, and ultimately the rate of inflation. In determining monetary policy, the bank has a duty to maintain price stability, full employment, and the economic prosperity and welfare of the Australian people. To achieve these statutory objectives, the bank has an inflation target and seeks to keep consumer price inflation in the economy to 2–3% on average over the medium term. Controlling inflation preserves the value of money and encourages strong and sustainable growth in the economy over the longer term. Reserve Bank of Australia. Monetary policy, rba.gov.au/monetary-policy. Naturally, the common central bank strategy of monetarism has come under increasing scrutiny since the global financial crisis of 2008, and in the following years as the debt levels have become more and more unsustainable. The solution. Bitcoin and other cryptocurrency frameworks have proposed alternatives to this fiat currency system, but that is no good either. Backed to cash with gold reserves, thus digital currency would vanish along with hedge funds, BlackRock, all that illusion. While underlying blockchain of these solutions most definitely adds value to trust and accountability in the macro or microeconomic system, their fundamental problem is that the currency is still not backed by any anchor of scarcity. It is fair to say that each individual cryptocurrency has a limited supply on its own network. There is no limit to the supply of networks. A tried and tested anchor for the monetary system has always been gold. As J.P. Morgan once said, money is gold and nothing else. J.P. Morgan testimony to Samuel Untermyer, Chief Counsel of the Peugeot Subcommittee of the House Committee on Banking and Currency, U.S. Congress, December 18, 1912. Historically, money was backed by gold in order to provide an anchor of scarcity to the money supply, but it has continued to hold value and withstand the test of time since President Nixon formally ended the gold standard in the 1970s. Gold investment is a proven solution to wealth protection under this unanchored economic system with diminishing confidence. Furthermore, gold has performed extremely well under climates of economic uncertainty like the 2008 global financial crisis. One of the easiest and most secure ways to invest in gold is with gold money that offer a secure digital solution for allocated physical gold investment. Most notably, in recent times, the RBA has been increasing their gold holdings in line with many central banks around the world. In July 2018, the RBA had $698 million USD of gold holdings as official reserves on their balance sheet. By July 2019, these holdings rose to $155 million USD. Reserve Bank of Australia official reserve assets rba.gov.au/statistics/frequency/reserve-assets.html. After all, gold is the only real asset on the RBA balance sheet outside of the confidence, albeit diminishing confidence. AustralianDebtClock.com.au is dedicated to helping Australians expand their understanding of the role of money in the economy. Understanding the trending environment of money, credit and debt is fundamental to an effective financial strategy for both business and households. Having a strategy that does not account for financial stability risk is unequipped to handle any future shocks to the Australian financial system. The Reserve Bank of Australia, RBA, published the Financial Stability Review on a semi-annual basis, April and October, to help provide insight across the forecast, actual and cause effect of the stock and flow of money, credit and debt. Financial stability of the Australian economy is a mandate of the RBA outlined on their website. Maintaining the stability of the financial system is a long-standing responsibility of the Reserve Bank. A stable financial system is one in which financial institutions, markets and market infrastructures facilitate the smooth flow of funds between savers and investors. This helps to promote growth in economic activity. Reserve Bank of Australia. Financial stability, rba.gov.au/fin-stability. The RBA explicitly does not guarantee financial stability. AustralianDebtClock.com.au was founded in 2010 in light of the global financial crisis to help inform Australians of our nation's trending money, credit and debt levels, comparable to international trending debt levels now, the United States USDebtClock.org. After all, gold is the only real asset on the RBA balance sheet, outside of the confidence, albeit diminishing confidence. AustralianDebtClock.com.au is dedicated to helping Australians expand their understanding of the role of money in the economy. Understanding the trending environment of money, credit and debt is fundamental to an effective financial strategy for both business and households. Having a strategy that does not account for financial stability risk is unequipped to handle any future shocks to the Australian financial system. The information contained on this website is general in nature and does not take into account your personal situation. You should consider whether the information is appropriate to your needs and, where appropriate, seek professional advice from a financial advisor. Amen.